Hey YouTube, Jason Ramos here with Day Trading Fearless, and today's tip and tricks of trading the stock market. So if you're new here, make sure you subscribe and like the video. If you have any comments, just hit them down below. But today we're going to be talking again about trading chart patterns, and we're going to discuss rising wedges, what they are, how to trade them, and ways to enter where you have low risk, right? That's what our channel is all about. If you're new here, we just try and give you tips and tricks to trade the stock market and help you with your entries, because with your entries is where all the money is made, if you think about it. Because if you have a bad entry, well, you're not going to make as much money. You're going to lose a lot more money. So with good entries, we have limited risk versus reward, right? We're not risking as much money. If we are patient, we identify good trading levels, and the patterns actually help us with a couple other things, a couple different strategies. I'm going to get right into that with you right now. So let's go right to the charts. Okay, so here we are in the charts, and a couple things. Are you able to look at this chart and see any of the rising wedges? Okay, I actually have been doing this so long, I could see 1, 2, 3, 4 right off the bat. Okay, and I also see falling wedges, but we're going to save that for another video. Okay, so let's start to look at the rising wedges. Actually, I see 5 of them, so I just saw another one. But let's get right into it, okay? So for this, if you want to follow along, maybe grab a chart and try and think of any stock. We're working with a 5-minute, 5-day stock. They happen all day long. You'll always see them. You just got to be patient and be able to recognize them, okay? So here's one. Okay. Now, before we go any farther, let's talk about what a rising wedge is. A rising wedge is going to be a pattern similar to this right here. The whole theory behind it is price falls, right? And then it rallies, and then it pulls back. It's like trading within a channel, okay? It's very simple, but one of the things that's happening is it's getting tighter and tighter, right? It's like a coil. The moves are not as large, right? So think about it here. Maybe that's a 25-cent move, a 20-cent move, a 15-cent move, a 10, 5, 3-cent move, and then price just eventually falls, okay? That is the theory in the way a rising wedge works. So as we could see here, we have price here, right? And then it rallies, and then it pulls back to this lower channel, and then it rallies, and it pulls back, and then it goes right down. Okay, now it's not going to be exactly like this. Sometimes the moves will be wider, they'll be longer, but this is the theory. Now, when you get 2 anchors here, a high, a low, right? A swing high, swing low, it rallies and then it pulls back. You can now start to draw your channel. Okay, so that's channel number 1. Channel number 2 is right here. And you can even probably go here, from here to here, right, and start to draw it. But a lot of times you'll see them towards the late stages, okay? And usually about 75 to 80% of the channel of the way before it gets to the very edge is when they tend to break down. So here, if you look, right, and let's redraw this one. go here and here, okay? So here you have 1, the pullback, right? 2, 3, 4, and then the breakdown. Okay, very, very powerful. Now, how could we tell when it's going to break down? Well, you really can't, right? Because you never know if it might just start to break down a little bit and then keep going higher, or just keep going higher and keep riding the channel. There are so many different ways it could do it, but usually I'll use the RSI as a guide. Is it oversold? Is there divergence, right? If we look up here, we're up at the 70, we're at the 70, and then it starts to roll over, right? Here, kind of the same thing, right? If you think about, we're up near almost the overbought levels, and then it rolls over. One of the things I like to do is when it does break down, okay, is the kickback. So once a bar closes outside, maybe look for the kickback to the lower channel. So what happens is it becomes a resistance level, the backside of the channel. That's my entry. So then what happens is I have all this reward and only this much risk, if that makes sense. Because if it gets back up into the channel, I don't want to be in it. So maybe I'll give myself, again, like my other videos, 10 cents, 20 cents, different things like that. So I hope that kind of helps, right? To help you to identify channels. Now let's start drawing some more. Okay, we actually have here, and all we're doing is we're just kind of trying to hit the tops and hit the bottoms, right? And looking for these bigger moves. Now sometimes it moves halfway back in, sometimes it'll make a move all the way in, right? Nothing's perfect, and then we fall. Okay, here's another channel. Rising channel, right? Swing high to swing high, swing low to swing lows. That's all they are. It breaks down, correct? And if we zoom in, so here it breaks down. Here you never really had the kickback, okay, back up to the channel. So sometimes you will, sometimes you won't. But sometimes it's just understanding and identifying these channels. Here you have one, right? Rising channel, just take the highs, connect them, take the lows, connect them, price breaks down. Here you can kind of see we start to break down here, right? We break down below, we rally to the back of it, and then we fail. These are a little harder. Sometimes instead of trying to be so micro, look at the bigger picture of it, if that makes sense, right? Just try and identify if they're going to work, or, hey, I see a bigger channel starting to form, okay? When you start to look at the markets in those ways, you'll start to see them develop a lot more, and it'll actually be a lot easier for you to see them. So I'm back here with you. Those are rising channels. I hope this helps. I hope you're able to go look at your charts and actually start to draw them. One of the best things, great tip for you guys today, is one of the best things you could do is draw trend lines on your charts. That's how I learned for years and years. I would just always draw patterns. I'd look for patterns. I'd draw them. I'd draw trend lines left and right, just even if they didn't make sense, right? Because I want to see what works, what doesn't, how does it happen, why does price stop exactly here? And when you start to do that, you'll start to see everything that I'm talking about in all my videos, why they're doing this, why price does it. Remember, there's a lot of algorithms out there, computers that just know this. their input. When price gets here, when price does this and it pulls back, I want you to buy. It doesn't think, and we have to train ourselves to be the same way, right? When we see a pattern, we need to jump on. We can't sit there and think. We can't wait for that confirmation. We need to be like a news weatherman, predict the future, right? Predict where the stock is going to go, the future, Forex, option, whatever it is. But when you start to do this, you're really going to start to see your level of trading go that much higher. So I hope you enjoyed this video. Make sure you subscribe and like. If you have any questions, shoot them down in the comment section and I'll answer them. And until next time, have a great day.